Traders, in this video, I'm going to bend your mind a little bit and I'm going to share what I believe and I think are the two biggest strengths that a technical trader enjoys. To explain these two concepts, I have to rewind, I have to take you back to my past with a small story, and I'm going to lay down these two biggest strengths which I feel is definitely there for a technical trader. So let's dig in and let's check what are these two strengths. Now, as I told you earlier, to explain these two strengths, I have to take you back to my past and share a small little story. Now, this story goes back around 2007 October. This is where I get hired as a technical researcher in ICICI Securities Institution Desk. This is in South Mumbai. Now, this was the first time I get an exposure towards institutions. Means our research, our work, our interaction are no longer with a retail or an HNI or even an ultra HNI. Now we are interacting with your FIIs and DIIs, your foreign institutional investors and your domestic institutions. So I'm talking about all mutual funds, all pension funds, all insurance funds, banks, and not only just limited to India, outside the country also. This was a big exposure for me, and this was the first time that I experienced what is a Bloomberg terminal. So I was overwhelmed, I was excited, but there was a lot of responsibility. When I was part of this team, our team had a senior technical research person, very senior. There was another person, and then I was relatively junior. And that's it, just two or three of us. And in the next room, there was around 30-40 brilliant researchers. They were in the fundamental desk. It struck me that I'm a part of a team wherein just 2 or 3 of us, and then there are 30 or 40 of them. Now, where lies the difference? So when it's about quality fundamental research, one person cannot focus on all the sectors. If you take a look at the Nifty 50 benchmark index, do you have any idea how many sectors are there? 15 sectors, out of which the banks, the financial institutions are the largest, and there are multiple banks. There are private sector banks, there are PSU banks, there are NBFCs, there are other financial companies also, there's insurance, there's asset management company. Similarly, there are metal stocks, metal companies, there are FMCG, consumer durables. So you get the picture. An economy, there are hundreds of various sectors, but the core 15 sectors makes up the Nifty 50 index. Now, do you really think that for one person it is possible to know everything about all the sectors, or even 3 or 4 sectors? Not justified, not right. And so one person dedicates his entire career towards typically 1 or 2 sectors, and he becomes an expert in that. And so what I realized, that a banking research head, he will be the senior person, and under him there will be many associates which will be helping him to analyze banking stocks. Private sector team separate, PSU's team separate, right? Similarly, there will be for metals, there will be for FMCG, there will be for consumer durables, etc. And that's why the team was of 30, 40 or even more than that. And a serious high quality research team requires that kind of bandwidth. You cannot do quality research with just 4 or 5 people. And even now, as I talk about, we're in the time of technology and AI and all that, even now when I'm making this video with you, and when I experienced this back in 2007-8, there's still a human element. These people used to visit those companies, those factories, those plants. They used to meet, interact with the management. And there's always a human element that used to go in their research. A good quality fundamental research team, department requires multiple people. On the other hand, on the other side of that floor, I was there with with being a part of a small team of just 2 or 3 people. Now, my client can ask me about what do you think about the Nifty? I can open up a chart and talk about Nifty. A client can ask me, what do you think about the real estate sector? What do you think about DLF? I can open up the chart of DLF. I don't need to dig in deep into the sector per se. I don't need to understand the jargons of the real estate industry. And the very next minute, I can talk about State Bank of India, a banking stock. I can talk about Bharti Airtel, telecom. I don't need to understand what is ARPU and what are the other parameters or ratios that particular industry requires. I don't need to. For me, it's the 2 dimensions of price and time. For me, the rules of the analysis are the same. It can be a banking stock, a real estate stock, or a telecom stock. Why not extend it further? We can analyze gold, silver, crude, natural gas, copper, USD INR, crypto, Bitcoin. So you understand that the first strength of a technical trader is he or she is not limited to any particular sector. They can analyze, track and trade any stocks, any sector, provided it is traded within an exchange and it is liquid enough. It should be liquid enough. You should have decent amount of past data which you will analyze, and then you will be able to take a decision. This was the first strength of a technical trader, that you don't have to be limited to any one particular core sector or industry. Let's move on to the second one. And the second one is, I would like to say, suit yourself. What do I mean by that? For that, I have to take you to my screen. Now, as you can see over here, I have the trading view chart open of, let's say, Reliance Industries. Now, what I mean by this, the second biggest strength of a technical trader has to do with time. You remember earlier in my video, probably it was the first video, wherein I spoke about on one axis we take price and on the other axis we take time. Between these two, price and time, which one do you think is in your control? Can you do anything about price? 100% no. Price is delivered by the market. What about time? Now, by default, all the charts that we plot are on the daily time frame, means 1 day's trade. Now, the trading view, if you focus and take a look at this particular area, and if I click that drop down, you will see that trading view offers us multiple ways of plotting time. We can plot time by the ticks, by the seconds, by the minutes, by the hours, by the days, or by range. There are various ways. The obvious one is of course 1 day. If I click on it, which is over here plotted in front of us, I see Reliance on the daily time frame. How is Reliance trading today? Every candlestick over here is made up of 1 day. Okay, but the beauty is I can play around. I can simply play around. I can increase it to a week. Every candle becomes a week. I can increase it to a month. Every candle becomes a month. So I'm actually increasing the time that has gone inside one candle. I can do the opposite. I can go to the hours or the minutes and I can plot 5 minutes. Every candle is just 5 minutes and one candle is over. It moves on to the next candle. I can move on to 15 minutes. 15 minutes, there are 25 candles in a day in Indian market. Or I can go to hours. I can have 1 hour or 2 hours chart. Which means that the market, the exchange is giving me price, open, high, low, close. I can change the time period. If I choose 5 minutes, open, high, low, close of 5 minutes, done, next 5 minutes. If I choose daily, open, high, low, close of daily, done, tomorrow. And similarly, if I choose quarterly or monthly, then open, high, low, close of a month or of a quarter and the next one. This is a very, very big strength for a technical trader. Why? Because once we have understood, once we have got a grip of analysis of these charts, one can execute his trades in various different time frames. right? If you are a fundamental investor looking at the company, will you be able to do intraday trades? Will you even be able to do trades for 3, 4, 5 days, short-term swing trades, positional trades? No, right? You'll have a typical, set of mind that your position is going to hold for months and years because you're taking a call on the company. Over here, you're not taking a call on the company. Over here, you're taking a call on the price. In fact, I'm gonna, discuss a bit about technicals and fundamentals in a dedicated video later. But what I'm trying to explain over here right now is, remember, suit yourself. I want to do intraday trades. Can I do it with technical analysis? Answer is yes. No, I don't want to do intraday trades. It's too much for me. I have work, I have business. I can't look at the screen all the time. I want to invest at my own pace. So can I take a look at the daily chart? End of the day, I can spend some time. Yes, do it. No, I can't look at the price every day. I got work. I can take a look at it once a week. Go to the weekly chart. Once a month, go to the monthly chart. Once a quarter. So you get the picture that suit yourself means whatever kind of trade you want to execute depending on your personal bandwidth. It can be anything. A full-time trader can do intraday, short-term, medium-term, long-term, buy and hold and everything. Whereas someone who's working might do just positional trades and buy and hold. Whereas someone who wants to only do intraday and nothing else can focus on intraday. So suit yourself means that no matter whatever time frame, whatever personality you bring to the market, you can execute that using charts. You can't do that with anything else. So if both of us understand this subject really well, we will be able to execute any kind of trades. And for that, the charts are good enough. We just have to tweak the time. Do let me know whether you liked the path that I chose almost 20 years back about technicals. It comes with its own strengths, and these are the two main strengths. You can analyze, track, trade any asset class. You don't have to learn something separate to trade something different, and suit yourself, you can trade any time frames. I hope you like these concepts. Do let me know. Till then, take care of yourselves. Trade well.